Started? Hello, this is Group 8 presenting on group assignment, that is evaluation of adoption of ISSB's sustainability standards and any limitations and impacts concerning the standards in Australian context. We have outlined our presentation in 4 parts. Each member will present a topic. Before presenting, members will introduce themselves and proceed with their topic of discussion. I'm Chandra, and I'll be providing a brief introduction to the new standards. Because of the increasing stakeholders' concern about environmental, social, and governance issue, many entities started voluntarily providing additional disclosures about these issues in addition to financial reporting requirements. Therefore, in order to create, based on this, at the backdrop of this justification, and to create a single international language for reporting sustainability issues, including opportunities and risk, ISSB was created in November 2021. It launched its inaugural standards in June 2023, with the objective of issuing a standard that provides a comprehensive global baseline to meet investors' needs. The new standards will integrate any material events concerning environmental and social issues into financial reporting. Australia will be mandatorily applying climate-related disclosures to large companies from July 2024. Whether the standards adequately address the need of all stakeholders is the primary concern of many. Our research objective is focused towards evaluating the effectiveness of the latest ISSB standards in promoting comprehensive sustainability and climate-related risk disclosure, the implication of these standards on different stakeholders, and identify any limitations or challenges associated with the implementation of these standards. The research questions we considered are the potential limitations of new ISSB standards for sustainability and climate risk disclosure, and how might this impact its effectiveness and adoption in Australia? Does the new standards adequately address the needs of all stakeholders? The third question is, how are Australian accounting regulators working to adapt these new standards? What challenges are they facing in this process? And finally, to what extent does adopting ISSB sustainability standards enhance transparency and accountability in Australian companies? Now, may I request the Chin to take over from here?
Okay, I'm Dishin Choden, and I'll be talking on literature review and the gaps. With Australia gearing up for mandatory climate-related financial disclosures, various research and studies have been made on this topic. Challenges highlighted by the PwC's 2024 report include risks of non-compliance and the need for reliable data for climate scenario analysis. Smith and Jones emphasize the benefits of ISSB standard for transparency and accountability, while Ali raises concerns about their investor-centric focus. Chua, Atkins, and Gianarikis highlights challenges in balancing international standards with Australian needs and managing diverse stakeholder expectations. Overall, the move signifies a significant step towards integrating sustainability into Australian financial reporting practices. Next slide, please. And we have identified 2 literature gaps here. The first one is exploring stakeholder trust. The impact of ISSB standards on stakeholder trust and confidence is a vital aspect that warrants more research. Understanding how these standards influence perception of transparency, accountability, and environmental stewardship among stakeholders, including investors, consumers, and regulators, can provide valuable insights into the effectiveness and implication of sustainability reporting framework. The second one is consideration of SMEs. While much of the existing research focuses on large corporations, it's essential to recognize the significant role that small and medium enterprises play in the Australian economy. SMEs may face unique challenges and opportunities in implementing sustainability-related financial disclosures due to resource constraints, differing priorities, and varying levels of awareness. Investigating how SMEs engage with and respond to sustainability reporting requirements can shed light on the broader impact of these initiatives across different sectors of the economy.
Thank you, Dechen. I'm Lekitema. I will be continuing the presentation from here. The topic is research method. This report have adopted the literature review methodology, which means that we have referred articles, academic articles, journals, and reports which examine the ramification and consequences of updated accounting standards concerning sustainability and climate change risk disclosure. And these are the findings. We have 4 findings in this presentation. However, we have list of findings in our report. Due to the time limitations, we will be presenting only 4. The first one is, as the companies engage more with their stakeholders, they will be able to comprehend what the concerned stakeholders are expecting with regard to the environmental sustainability and climate related risks. And through that, they will be able to improve their assessment with clear goals and better information sharing can be done. Another one is it will significantly improve the transparency and accountability of organizations' action. And third one is climate scenario analysis faces major limitations due to the data reliability and complexities in the procedures. Final one is greenwashing. It poses a threat to the effectiveness and trustworthiness of sustainability norms, eroding the trust and distorting the information in the market. From here, Paltan will continue the presentation.
Hello. Now I'll be presenting on the recommendation. Based on our findings, we have 4 recommendations on our research report. Number 1 is offering training and support to ensure the professional capabilities in sustainable reporting. By offering trainings and supports to those professionals, can enhance will ensure that industry can meet the disclosure requirement effectively. Number 2 is implement the strict monitoring and enforcement mechanism to deter the greenwashing. By implementing such a mechanism, it will help in avoiding the greenwashing practices, thereby maintaining the integrity of sustainability disclosure. Number 3 is strive for the balance between the investor-focused reporting and the broader sustainability consideration. Hereby trying to balance the balance between the investor-focused report and sustainability reports. It will enable to ensure that all the stakeholders are adequately represented. And the last one is to foster the culture of continuous improvement and adoption in sustainability reporting practice, like by promoting or developing such a culture of improvement and adoption in the sustainability reporting practice. It will help in addressing the emerging challenges and all the stakeholders need. Next, please. Now I'll be presenting on the conclusion of our research report. We would like to conclude that the implementation of new accounting standard on the sustainability and the climate change risks disclosure, it offers both the opportunities and the hurdles in the Australian organization. while trying to focus on the transparency and the accountability, it's very important to ensure that those standards are addressed based on the various needs of all the stakeholders. And for addressing these concerns, collaborative effort is required from the related stakeholders like regulator, standard setter, organization, and all other related stakeholders. So thus it will enable to ensure that the sustainability reporting practice are effectively served as per their intended purpose. And next, please. These are our references for our research report. And this is the end of our presentation. Thank you.